Now speaking, Tom Siebel, Chairman and Chief Executive Officer. C3.ai finished the fourth quarter of fiscal year 2023 strong and is looking forward to a stronger year ahead. The enterprise AI market has grown faster than experts predicted, and C3.ai has been at the forefront for over 10 years, developing a platform and over 40 applications that allow customers to take advantage of AI. In the fourth quarter, total revenue was $72.4 million and free cash flow was $16.3 million, with $812 million in cash and cash equivalents. For the full fiscal year, total revenue was $266.8 million, an increase of 5.6%, with subscription revenue up 11.4%. Most demand was for turnkey enterprise AI applications rather than development tools, and there was strong growth in federal business. There was increasing diversity in the industries served, including oil and gas, high-tech, energy and utilities, manufacturing, food processing, chemicals, life sciences, and other industries. C3.ai also increased its qualified pipeline with AWS and Google Cloud by 24% and 460% respectively. The company released generative AI solutions to the market and closed 3 applications in the quarter with large enterprises. Guidance for fiscal year 2024 is total revenue between $295 million and $320 million and non-GAAP loss from operations between $50 million and $70 million. C3.ai will host a mid-quarter investor day in New York City on June 27. Now speaking, Juho Parkkinen, Chief Financial Officer. The company reported total revenue of $72.4 million, of which 78.5% was subscription revenue and 21.5% was professional services. The quarter saw an increase in gross profit to $53.9 million with a gross margin of 74.4%, positive operating cash flow of $27.1 million and free cash flow of $16.3 million. Operating loss was $23.5 million, with the main drivers being the annual customer conference and more rigorous expense management. For the full year fiscal 2023, revenue was $266.8 million, non-GAAP loss from operations was $68.1 million, and free cash flow was negative $187 million. Gross margin for the year was 77% and subscription revenue was 86% of total revenue. At the end of Q4, accounts receivable including unbilled receivables was $134.6 million, with 76% of receivables being current or less than 30 days past due. GAAP RPO was $381.4 million, down 20% from last year, and current GAAP RPO of $186.3 million was up 9.8% from last year end and up 5.7% on a sequential basis. For FY 24, quarterly revenue is expected to range between $70 million and $72.5 million, while revenue for the full year is expected to range between $295 million and $320 million. Non-GAAP loss from operations is expected to range between $25 million and $30 million for Q1 and between $50 million and $75 million for the full year. Cash and investments are expected to be lowest at around $700 million during the year. Customer engagement increased from 247 to 287 comparing Q3 23 to Q4 23, while traditional customer accounts metric went from 236 to 244 for the same period. The company expects to be non-GAAP profitable for Q4 24 and beyond and cash positive in Q4 24 and beyond on a consistent go-forward basis. As a go-forward KPI for investors to assess performance, the company recommends focusing on the number of pilots started during the quarter, conversion of those pilots to production, and actual CPU consumption fees generated. Canaccord Genuity analyst Kingsley Crane inquired, Tom, what do you attribute the decrease in sales cycles to, consumption model or increased excitement and productivity within the sales force? Tom Siebel replied, No, thank you Kingsley. AI is certainly top of mind for many companies, and our consumption-based pricing model makes it easier to adopt our technology. We've reduced the cost of entry dramatically from $5 million, $50 million just a few years ago to $0.5 million with the option to pay 55 cents per CPU hour if desired. Our improved sales team has resulted in a sharp increase in the number of transactions and business activity, so we're quite optimistic. Canaccord Genuity analyst Kingsley Crane inquired, Juho, what can you tell us about the timing and contribution of consumption to revenue in the back half of the year? Juho Parkkinen replied, in response to the question, yes, Kingsley, we had a good increase in pilots during the quarter. We ended with 19 and initiated 17 more, resulting in an overall increase of 8. This should lead to a gradual uptick in consumption revenue from Q3 through Q4 this fiscal year. Additionally, existing customers with large enterprise agreements are expected to remain on those agreements upon renewal. However, we anticipate a rise in RPO as they renew. JMP Securities analyst Pat Walravens Inquired, Tom, could you comment more on the opportunity with national security in the Department of Defense, as well as your version of generative AI that doesn't hallucinate? How do you prevent this from happening? Tom Siebel replied, Pat, you asked about the authorities we have to operate contract vehicles. We have two that are associated with DoD, one is $100 million and another is $500 million. These could be applicable to our work at RSO, which stands for Rapid Sustainment Office, and our predictive maintenance application for the U.S. Air Force. Our proposal to the Secretary of the Air Force was to take this into full production for all 5,000 aircraft in the Air Force, which would increase aircraft availability by 25% and decrease maintenance and readiness costs by $6 billion. The Secretary and his Chief of Staff, General Brown, went away for a few months to consider our proposal, and they selected C3 as the standard system of record for all AI-based predictive maintenance across the U.S. Air Force. This is a big deal, as it opens up the opportunity to make it a line item in the budget and talk to other services like the Army, Navy, Marines, and National Guard. To ensure accuracy and traceability, we leverage the C3 platform, which aggregates enterprise data, text, code, images, sensor data and more into a unified federated image. It then reads this data via a deep learning model and stores it in a vector database. We built a firewall between the large language model and the data, so every time a question is asked, the same answer is provided and there is no risk of large language model cost data exfiltration or hallucination. This makes us stand out from the competition and we are seeing high levels of interest. Morgan Stanley analyst Sanjit Singh inquired, Tom, can you provide an overview of the sales motion going forward for C3 Generative AI Suite? What type of deals will we see, self-service consumption-based or working with partners to help large enterprises navigate the world of generative AI? Tom Siebel replied, Great question, Sanjit. Our first 3 engagements are with organizations generating over $100 billion in revenue, and the application will launch in 12 weeks, despite having just 3 people on the project. To move from 6 customers to 60 or 100 is straightforward. Our challenge is taking it further, to 6,000 customers. This requires leveraging channels like the AWS and Google marketplaces, and making the product usable like an Apple product. Open the box, turn it on, and it works. We're up to the task, and if we succeed, hold on to your socks. Morgan Stanley analyst Sanjit Singh inquired, what is driving the guidance for next year's growth? Is it a function of coming off a tougher year or an increase in demand from pilots in the field? Tom Siebel replied, the transition to consumption-based pricing has had a short and midterm negative effect on our revenue growth. We anticipated this when we made the decision, as anyone with a basic understanding of mathematics can figure out. We remain on track with our plan, having made a timely investment that will yield returns in FY 24 and 25. Wedbush Securities analyst John Kotzingris inquired, how have you seen the diversity of industries served evolve, and what do you anticipate in the future? Tom Siebel replied, great question, John. AI in the enterprise market is still in its infancy. Smart Grid was the first to invest in this technology due to their large investment in upgraded infrastructure. The largest market for AI today is predictive maintenance, which optimizes reliability in both the military and private sector. We can expect AI to accelerate all aspects of business operations, from production optimization to supply chain risk. It's clear that AI will have a major impact on many industries, and we must stay prepared for what comes next in the next few years. Needham & Company analyst Mike Chicos inquired, hey, Juho, could you provide more detail on the 43 deals closed this quarter? Specifically, how many were consumption-based and how many under the old pricing model? Juho Parkkinen replied, hi Mike, under the new consumption-based approach, all follow the new model, none are under the old. Needham & Company analyst Mike Chicos inquired, can you provide an update on how many of the 19 pilots that were initiated this quarter have converted to production, and what the CPU is for those consumption deals? Juho Parkkinen replied, Mike, in Q2 we made progress with our pilot agreements and are expecting 70% of them to convert into follow-on consumption deals. We anticipate seeing more of these conversions in Q4 as the original pilot arrangements begin to mature. Needham & Company analyst Mike Chicos inquired, could you please provide some insights into the higher professional services revenue for Q4 and how it should be considered relative to the 10 to 20% range we've been discussing? Juho Parkkinen replied, going forward, we anticipate revenue in the 10 to 20% range. There will always be projects that customers ask of us, yet it's hard to predict exact revenue figures. However, we believe 10 to 20% is a reasonable expectation. Needham & Company analyst Mike Chicos inquired, what impact have the recent market trends had on your company's financial performance? Bank of America Merrill Lynch analyst Adam Berger inquired, have the use cases of AI altered your R&D investments in any way? Tom Siebel replied, the investments we've made over the past 14 years have certainly paid off, as evidenced by our 40 applications. We were surprised by the response to C3 generative AI and believe it is a big opportunity. Therefore, we decided to invest heavily in that product category despite difficult market estimation. Bank of America Merrill Lynch analyst Adam Berger inquired, do you expect any verticals to experience an outsized uptake in the use of your generative AI solutions? Tom Siebel replied, good question. Everyone is interested in this, having a Google-like interface where they can ask any question about their business. We're talking about giving the CEO, manufacturing and sales operators a fast way to get answers to questions like, what are the problems in our supply chain? Or how ready are we at less levels? Currently it takes a week for most people to get those answers, but with open initiatives, such as Google for DoD, these answers can be provided in seconds. This technology is amazing and will be beneficial across all industries. Needham & Company analyst Mike Chicos inquired, can you help us understand what levers you have to pull to ensure C3 reaches its goal of achieving non-GAAP profitability by fiscal 24? Tom Siebel replied, Mike, I agree that our guidance is in line with what the street expects. We have considered all the outliers and are confident in our current guidance. As for how we are sure to get to profitability, we have put in place a comprehensive strategy that will drive us towards profitability. Our team is actively executing on these plans and we believe we are well positioned to reach our goals. Juho Parkkinen replied, right, Mike. I'm confident that we can control spending towards the end of the year, should our expected revenue not be met from our planned investments into generative AI. We're very optimistic about the prospects for this technology. Tom Siebel replied, our plan is very detailed and our management team is well prepared with large budgets. We are confident that we will have a profitable, non-GAAP cash flow in Q4. Even if the generative AI is zeroed out, we still anticipate running a successful business. Tom Siebel replied, the reduction in average sales cycles for agreements is driven by our focus on streamlining our process and improving the customer experience. We have been successful in reducing the time it takes to close deals, and we expect this trend to continue over the rest of the year. Tom Siebel replied, I believe the consumption-based pricing model is driving shorter sales cycles and making it a fairly easy sale. It would cost scores of millions of dollars to bring large-scale enterprise AI applications into production with companies like Accenture and IBM. As we move more products onto platforms such as AWS Marketplace and Google Marketplace, we expect to see even shorter sales cycles. Tom Siebel replied, thank you all for joining us today. We look forward to continuing our conversation on June 22nd at our investor conference. We'll be discussing some exciting developments, and we hope you can join us. We appreciate your time and attention.